let us come to the next level of discussion. Whenever you are entering into a forward contract வந்து எப்பவுமே it has to be executed on that date only. ஓகேவா? கான்செப்ட் பாரு. Forward contract should be executed on due date. Okay, should be executed on due date. So whatever is the due date pa, அது அந்த நாள் execute ஆயிருக்கணும். Whatever be the case, okay, the world turns upside down, but you have to execute on due date. Okay, you have to execute on due date. It cannot be cancelled. It cannot be, preponed, or it cannot be postponed. Okay, va? It cannot be preponed. It cannot be preponed, postponed, or cancelled. For example, okay, for example, let us say for an example, நான் வந்து ஒரு goods import பண்ணிருக்கேன். ஓகேவா? For that, after 1 month, I have to pay $1 lakh. Let's say that $1 lakh, $1 lakh I have to pay after 6 months. So $1 lakh forward purchase I have made. Forward purchase I have made at 75 rupees per dollar. Okay, at 75 rupees per dollar. Are you all with me? If $1 lakh, okay, when I have entered, okay, entering date, contract entering date is 1/4/2024. What is the due date? My due date is, let's say, 6 months, right? So 4, 5, 6, 7, 8, 9. It is 30th September 2004. Actually, oh, 1 day more. Okay, 1st October 2024. Clarity, yeah? Which means whatever happens, okay, the bank will tell you, you purchase $1 lakh from me at due date, because I have entered into contract. That's it. Are you all with me? I have entered in 1st April at 75 rupees. I can also enter in 10th April. Probably the rates are different. But my due date is 1/10/2024. I have entered into a forward contract with a bank. The concept here is forward contract should be honored. Honored na, if you promise to purchase, you have to purchase. Forward contract is a promise. Correct? Because it's a forward sale or forward purchase. It is a promise, right? $1 lakh. So you are telling to the bank, $1 lakh I will purchase from you on 1st October 2024. For that, the bank has entered into a contract. Hey, you go. Okay, va? So now, let's say you have imported goods. திடீர்னு நடுவில் என்ன பாயிடுச்சு, அந்த importer is making something no, okay, va, I'm not able to this, okay, I'm not able to honor, I'm not able to give you goods, sorry, he's making some delays. You please take from some other person. You please take from some other person. அப்போ நான் ஏதோ ஒரு இந்தியன் பர்சன் கிட்ட நான் வாங்கிட்டேன் அந்த machine. ஓகேவா? So now you see, I have entered on 1/4/2024, and this incident is happening on 1/9/24. Okay, 1/9/24. What I want to do, I want to cancel. I want to cancel my forward contract. Everyone, are you understanding? I want to cancel my forward contract. What is the bank telling? The bank is telling is that I don't know anything, okay, you come to me on 1st October, you purchase $1 lakh, I don't know anything. Are you understanding? The bank is telling, I don't know anything, you come to me on 1st October, you take $1 lakh, you do whatever you want. Okay, I don't know anything, you do whatever you want. That is what it is telling. Okay, that is what it is happening now. Now you see, in reality, these cases will happen or not. Correct? You cannot be so much strict. In reality, these cases can happen or not. Probably, I would have, okay, or probably, let us say, this is case number 1. Case number 2. Case number 2. That person is now calling and telling, I don't want money on 1st October. I want money on first September only. Urgently I want, correct? Urgently I want. First September only I want pa. Okay va? So which means 1/9/24 I want. Okay, 1/9/24 I want to honor. Okay, I want to execute. Are you all with me? This is case number 2. This is case number 2. First on 1/9/24 I'm going to bank and I'm telling cancel. Okay. Next on 1/9/24 I'm going to bank and I'm telling I don't want cancel, but I want now. Now the bank will tell no. We have entered into contract on 1st October 2024. I don't know. I will pay you only on 1st October only. You paid forward purchase for that price only. Correct? I don't know anything. You want, you take spot, you go. Understanding this, everyone, are you all with me? Are you understanding what is happening now? Or case 3. Case 3. Okay, I am going into the bank. Due date is 1st October. Okay, I am going into the bank on 1st October 2024. Bank is saying, hey, take your $1 lakh, give me money. What he is telling is that, no sir, I have taken 1 more month credit period. Okay, I want 1 more month. I have taken 1 more month credit period. I want 1/11/24 to execute. Please postpone my purchase. Please postpone my purchase. Are you all with me? Here on 1/9/24 I'm going, I'm asking him to execute. Here on 1/10/24 I'm going, I'm asking him to postpone. So you see here cancellation is there. Here preponement is there. Here postponement is there. Correct. These are all the 3 cases. It cannot be preponed, postponed or cancelled. Sir, appadina enna sir pandrathu is the next issue. All these are business scenarios pa. All this can happen. All this can happen. But what should I do is the next issue pa. In these 3 cases, what should I do is the next issue. Okay ba. This is the concept of, okay, from here there is a birth of a concept which is called as disposal of future contracts, or it is also called as forward contracts. Okay, disposal of forward contracts. There is a slight difference between futures and forwards that I will discuss it in afterwards. But for now, okay, for now you understand future forward, both are having same terminologies. For now, there is a slight difference. Okay, now sir, disposal of forward contracts. Till now, are you all with me? Please respond. Are you all with me? Okay. Now sir, how should I dispose this, sir? How should I dispose this? How should I handle this situation? Adha I discuss panna porappa. Clarity. Okay, sir. Now, sir, disposal of forward contracts. Okay, disposal of forward contracts. The first thing is that either I want to honor the contract or I want to cancel the contract. Correct? Two cases are possible. Here I am cancelling. Here I am honoring pa. But enakku some leverage venu. Okay va? I want some adjustments needs to be done. I want to honor, but some adjustments needs to be done. So 2 things are possible pa. In forward contracts, 1, I want to honor the contract. 1, I want to cancel the contract. Clarity, yeah. This much is done. Sir, when I am honoring, okay, when I am honoring, 3 cases are possible. I can honor on due date. Whatever is the due date, on the date I honor pandren. I want to honor early advance, correct? I want to honor early advance, or let me call it, I want to prepone, or I want to postpone. Are you all understanding? 3 cases are possible. If I am honoring, either I will honor a due date, or I will ask him to prepone. Sir, your due date is 1st September, sir. Please give me money on 1st August, please. Correct? Inga please la kadiyadu. There is some method how to do this. Okay. So there are 3 cases are possible: due date, prepone, and postpone. Are you all with me? So these 3 things are possible. See, when you are honoring in due date, there is no issue, pa. Okay, va? There is no impact. Whatever is your planned, and the planned outflow is there. So no P&L impact. Correct? No profit or loss. Here there is no profit or loss. If you are honoring on due date, there is no profit or loss. Correct? This is a normal case scenario. This is the ideal scenario that we will be having. Okay, sir. Sir, now you are asking to prepone. Now, it also depends when I am going on to the bank. Correct? Let's say my due date is 1st September. I can go to the bank on 1st August. I can go to the bank on 1st July. And I can say I want to prepone to 1st August. Correct? Appo when I am going to the bank is the next issue. Correct? Sir, I am going to the bank either before due date, which means early. I am going to the bank early itself, and I am telling prepone, which means 1st April I entered, right? 1st May I am going to the bank. Bank is saying, hey, why are you coming? I'm just, sir, your due date is 1st October, right? Please prepone to 1st November. That is also one preponement. Okay, va? Next, I will go on the due date. Okay, va? And then I will ask him to prepone, which means on the date itself I will go. Correct? On the due date I will go. On, or like wherever is the place. Okay, or at that time itself I am going. Okay, va? At that time itself I am going on due date, which means new due date. Okay, va? At that time. Okay, va? At time of due date, or at early time, at preponed time. At what date I want, on the day I am going to the bank. Hey, give me money now. Correct? Prepone. Before itself I am coming to the bank. Okay, va? So this is early, and this is at spot. Spot prepayment you are asking. Second, you are giving bank. Hey, early I am going, and then I am asking. Okay, so this is one. Sir, again postponement is possible. Again, postponement is possible. Correct? In 2 different cases. Either I can go early before due date. Either I can go before due date. Correct? Which means early I can go. Bank is saying, hey, why are you coming early? I'm telling, sir, this is 1st October, right? Please give me money on 1st November. Okay, va? I don't want on 1st October. Please give me money on 1st November. Correct? So before itself you are going. Okay, va? Next, you are going on the due date. Okay, va? Next, you are going on due date. On due date. So at spot you are telling to postpone. Okay, va? At spot you are telling to postpone. Are you all with me? At spot you are telling, hey, postpone. Bank is giving you $1 lakh. No, postpone. Now forward purchase it is applicable, forward purchase it is applicable, and then forward sell it is applicable. Are you all with me? Now let us come to cancellation. Let us come to cancellation A. Cancellation also 2 cases are possible. Either you are going before due date, early you are going. Correct? Before due date, early you are going and you are telling cancel, or on the due date you are going. On due date you are going and then you are telling cancel. Correct? At spot you are telling cancel. See how many cases are possible. Are you understanding how many cases are possible? Disposal, either you can honor. Appo honor 3 possibilities are there. Either honoring it at due date, or preponing it, or postponing the honor. Okay, va? Or the second case is cancel. They postpone also when you are going to the bank and you are telling to prepone, or when you are going to the bank and you are telling to postpone. Before due date or on the time of due date, or before due date or on the time of due date. Okay, 2 things are only possible. Due date you have to go and give a hajri pa. That is what. So now this is done. Are you all with me? So now how to handle these? Okay, how to handle these? You see, for honors and all, okay, wherever it is postponement or preponement, wherever it is postponement or preponement, this thing alone you understand. Difference between swap is profit or loss. Difference between swap is profit or loss. And wherever it is cancellation, okay, wherever it is cancellation, difference between original contract and new contract is profit or loss. Sir, what is this, sir? You will understand in some time, okay? You'll understand this in some time, but for now, you just understand. Sir, preponement and postponement, the difference between the swap is the P&L, profit or loss. Cancellation, the difference between the original contract and the new contract is profit or loss. Okay, okay, pa. Sir, what about due date? No P&L, pa. Due date, no P&L. Like, what is the profit or loss? So this thing, just give me some time, I will explain. But for now, have you understood all the possibilities for disposal of forward, sir? There is no other possibility that could come, pa. All the possibilities that we have covered. Everyone, are you understanding this? See, I will give you some examples of how to handle this. I'll give you some examples of how to handle this. Okay, let's say that you are entering into, now these cases are possible for both forward purchase and forward sale, correct? For importer and exporter, importer exporter, okay, in all these cases it is possible. So for importer, what will be the case? For exporter, what will be the case? Okay, all these cases are possible. Importer na what? Outflow. Exporter na what? Inflow. Okay, outflow na it is forward purchase. If you are having an exposure of outflow na, there will be a forward purchase. If you are having an exposure of inflow, there will be forward sell. Correct? And the concept you already know. Now let us say on 1st January you are entering into a contract for a due date on 1st April, correct? You are having a forward purchase contract. Are you all with me? You are having a forward purchase contract. But now you are going to the bank before 1st February, you are going to the bank and you are telling, sir, I want the money on 1st March. Are you all with me? Till now, are you all understanding? This is the original contract. This is the original contract, which is 1st Jan, you are entering into a contract and you are telling, sir, I need money on 1st April, forward purchase. Now, 1st February, you are going to the bank and you are telling to the bank, sir, I need money on 1st March. Purchase, correct? I need the forward purchase on 1st March. So basically what it is happening, it is preponing. It is preponing. When you are preponing before due date, before April you are coming, correct? So you see here, this is nothing but case number 1. Now here I am writing case number 1. Are you writing? So example number 1. So this is this example. Sir, before due date, preponing before the due date. How many of you are understanding this? Everyone. This is what is the example. Original contract of 1st January, I want to enter into a contract for 1st April. What? Forward purchase. I am going on 1st February to the bank and I am telling to the bank, hey bank, give me money on 1st March. Hey bank, give me money on 1st March. This is what is happening. Okay. Now sir, how will you handle this? Everyone, how will you handle this? Bank is telling, hey, there is no option of cancellation at all. So what you are going to do is that, now you know, right, you want money on 1st March because probably your importer would have told you, I want money, okay, early. So you enter into one more forward purchase contract on 1st February for a due date of 1st March. You will enter into one more forward purchase contract. You will enter into one more forward purchase contract. Are you all with me? Super. Sir, up a forward purchase I have to do on 1st April purchase side. What will I do? You will enter into a forward sell contract on same 1st February for a due date of 1st April. For a due date of 1st April. For now, I am not writing the prices. Whatever be the prices. If the prices will difference the profit or loss. But basically, this is something that you are going to do. Are you all with me? You will enter into a new contract and then you will cancel your old contract by way of entering into a counter contract. Sir, 1st February, you are entering into a forward purchase that I want on 1st March. Okay, sir. So this outflow is done for 1st March. But now, okay, but now on 1st February, you are entering into one more contract to forward sell, because anyways you want to forward purchase this, correct? But this forward purchase is offsetted by this forward sell because both are 1st April. So 1st April I will receive, 1st April I will sell. So this is getting offsetted. Okay, so bank will automatically offset this. So which means this contract stands to be cancelled. Okay, and this contract needs to be entered. Okay, this contract needs to be entered. How many of you are understanding? Please respond this part. Please respond. How many of you are understanding this? Super. Are you all with me? So forward purchase now, this is what the importer will do. Okay, this is what the importer will do, because this is an importer, correct? An importer needs to pay money. Okay, so he will purchase. Importer, exporter. Okay, importer, exporter. So importer now originally he will have forward purchase. What is the original contract? Forward purchase. Here what is the original contract? Forward sell, correct? Okay. Sir, what I should do, sir? I should enter a new forward purchase and I should enter a new forward sell. This is what is my this thing. Okay, this is what is this new forward purchase and new forward sell contract I have to enter. Clarity, yeah. Sir, what if it is an exporter? Example, 1st Jan I have entered into a contract which is the due date is 1st April and my contract is forward sell. Okay, I want to sell. Okay, I want to sell my, because there is some receivable. Now I'm getting that money early only. So I know that I will get my money early. So which means on 1st February I'm going into the bank and then I'm telling you please buy from me, okay, or you please sell US dollars on 1st March instead of 1st April. No, not possible. So what you are going to do, you will enter into one more contract of forward sell and then you will enter into one more contract on 1st February for a due date of 1st April. To cancel that contract, I will enter into a counter contract which is called as forward purchase. Are you all with me? So here I will enter into a new forward sell and here it will be new forward purchase. This will be my thing. Till now, how many of you are understanding? Hello, please respond. How many of you are understanding till now? Okay, same thing. Now I can take any example. Okay, now I can take any example. For example, on due date I'm going. Okay, on due date I'm going. Let us say third example. On due date 1st Jan. 1st Jan I've entered into a contract which is the due date is for a forward purchase. Okay, this is what is the original contracts. Okay, this is what is original contracts, and these are the new contracts. A new contract and new contract that you are entering. Now this is what is the original contract. First Jan, you are entering into a contract which is maturing, or which is not maturing. The due date is 1st April. So 1st April you want to purchase dollars. Now 1st April itself you are going to the bank. Or let us say it is preponement, right? Preponement. So let us say on 1st March you are going to the bank. And you are telling that I want money now. Whenever you want money, you are going to the bank. I want money now. So what bank is telling? I don't have. Okay, I'll give you only. So you want to take it at price. So 1st March, you will enter into a contract for spot purchase. Are you all with me? You will enter into a contract of spot purchase. Are you all with me? And same way on 1st March, you will enter into a contract which is maturing on 1st April. Okay, which is maturing on 1st April. To counter this, you will have forward sell. Okay, forward sell. Are you understanding? This is for the, what is the third example. Okay, this is what is the third example. So example number 1, example number 2. So third example. Okay, third example. Let's say it is an importer, because it's an importer, right? Importer, the original contract is forward purchase. Sir, what will be the new contract? First, it will be new spot purchase and new forward sell. Clarity, yeah? So new spot purchase and new forward sell. Two contracts you will have. Similarly for exporter. Okay, similarly for exporter. Appa exporter na inge forward sell irukom. So spot sell and then forward purchase. Same thing. Okay, same thing will be there. Now sir, let me come to postponement. Fourth one. Let us say I have entered into a contract on 1st January, which is ending on 1st April. Okay, I've entered into 1st January, which is ending on 1st April for forward purchase. Now, before due date I'm going, which means on 1st February I'm going, and I'm telling that, okay, I don't want on 1st April, I want on 1st May. So you are entering one more purchase, forward purchase, okay, and same way on 1st February, you are cancelling forward sell. This is what is the example. Okay, this is what is the example of postpone early. Clarity? Hello? Same way on due date you are going and then you are postponing. For example, okay, 1st January you are entering into a contract, okay, which is maturing, or which is the due date is 1st for 1 April for forward purchase. Okay. Now you are going on 1 April. You are telling that I don't need money on, okay, I don't need money on 1st April. I need money on 1st May. So what you have to do? 1st April, anyways you want to purchase, Adi you will do spot sell. And on 1st April, you will enter into one more contract on 1st May for forward purchase. Okay, for forward purchase. Are you all with me? Correct. But what is this? This is postponement. But at a due date. Clarity, everyone? Are you all having clarity? Yeah? Hello? Respond. Conceptual clarity you guys are having, what we are actually doing in the spot sell, forward purchase. Adala unakku puriyudappa? If you are not having clarity, you tell me, I will explain it in a better way. Your response is more crucial. Okay. So let us take one example for cancellation. So 6th, for example. Sir, 1st April, sorry, 1st January, I am entering into a contract which is the due date is 1st April for forward purchase. For forward purchase. Before due date, I am coming. 1st February, I am coming and I am telling that please cancel the contract. Okay, 1st February, I am telling, okay, 1st February, what I am telling you, please cancel the contract. Now, this contract cannot be cancelled as it is, correct? Appo, what I am going to do, okay, what I am going to do, first, okay, first I am going early, correct? I am going early. So, I want to cancel. So what I am going to do, directly I will enter into a contract on 1st April for forward sell. So no cancellation is possible. So what I am doing, on 1st February, I am entering into a contract for forward sell on 1st April, a counter contract. Now this is getting cancelled. That's it, cancellation is done. Because I don't need any inflow or outflow. Here you see, I have an outflow here. I have an outflow here. I have an outflow here, correct? Net I am having some purchase here. Net I am having some sell here, correct? But here I want to cancel. So that's it. So what is this cancellation? And that too before due date. Okay, wow. Sir, what if I'm cancelling on due date and everything I'm discussing in terms of importer forward purchase, it could be forward sell also. Up a counter will be forward purchase. Sir, 7th one. Sir, on 1st April, I have entered into a contract which is the due date is 1st January. I am entering into a contract. The due date is 1st April, which is a forward purchase contract. On 1st April, I am going and telling, sir, no, sir, I don't need money. Correct? Please cancel the contract. He is saying, I cannot cancel. You take, you sell on. Okay, you sell. So 1st April, you are going and then you are spot selling. Okay, you are doing spot sell. The contract is cancelled. So cancellation is at due date. Okay, at due date. Clarity. Everyone, are you all having clarity here? All the cases we have discussed. Okay, all the cases we have discussed for an importer perspective. Exporter perspective, forward sell become forward purchase become forward sell. So this forward sell, this forward purchase counter. So this is what is the disposal of contracts. Appa sir, avlo contract nam enter panuma illapa. You just have to tell the bank prepone to 1 month. Appa bank will do all these things for you. And end of the day will tell you for this you are having some extra charges. Okay, or for this you are having some gain. Correct, that the bank will give you. That net profit or net gain the bank will give you to adjust these contracts. Ultimately inside these things are happening, but for you they will tell that okay, the charges is this much. Okay, for you they will tell you that the charges is this much. Are you all having clarity this much? Okay, so now let us do 1 or 2 problems for you to understand. Okay, for you to understand how to calculate profits or losses. Are you all ready? Please respond. Are you all ready to do some problems in disposal of forwards? Disposal of forwards is so important. Okay, then in every examination one question will definitely come on disposal of forward. Any case it will come. It's very logical. It's very easy to answer. Are you all ready? But most of the students will not have clarity for disposal of forwards. Now, let's say a question. Okay, let's say a question. An Indian company enters into a forward contract or let's say forward agreement with a bank. Forward contract is also same. On 17th January for purchasing, so forward purchase, okay, for purchasing USD $1 lakh Okay. Now, as on that date, as on that date, the forex situation was as follows. The forex situation was as follows. Sir, what is the spot price? Okay, all the prices are how much INR per dollar. Okay, wow. What is the spot price? 46.5400 5450. 31st Jan 775 swap points. Okay, 775 825. 28th Feb 2350 2425. 31st March 4100. Correct? So on 17th January, I have entered into a bank. Okay, I have entered into a bank to purchase $1 lakh. Okay, on $1 lakh. As on that date, these were all the forex situations. Now, on 15th February, the company comes to know. The company comes to know that it has to make early payment for this on 28th February and not 31st March. Okay, on 15th February, the company is getting to know that now I should not make payment of 31st March. I should make payment of 28th February only. Correct? So what is this case? Forward purchase I have entered and the due date is 31st March. 31st March is the due date. Now 31st March is the due date now. Okay, 31st March is the due date now. On 15th February, so before due date itself I am going and I am preponing the contract. So this is the first case. Okay, wow. Now the current rates on 15th February are as follows. Now all the rates are in INR per dollar. What is the spot price? 46.5025 5075. 28th Feb 650 and 700. These are swap points. Okay, va? And you have to be very careful in reading the swap points. Whenever the swap points are ascending, it is a premium. If it is a descending, it is a discount. You have to see, okay, if it is ascending or descending. This is very important. Okay, you should every time you should keep this in mind. 31st March 2225 2275 and then 31st April 3900 4000. What are the charges payable? What are the charges payable by the company? What are the charges payable by the company? If they want to make this adjustment, what are the charges payable by the company is the question. Okay, this is what is the question. Now, let's see the solution. Okay, well, let us see the solution. Now, this becomes very easy. Okay, this becomes very easy. The only thing is you have to understand. Okay, you have to understand. Now, everyone understand. So, what is my transaction date? What is my due date? Okay, or maturity date? What is the type of transaction? And the three things, I'm just writing it. Transaction date, the date of transaction, maturity date, and type of transaction, and then what is the rate. Okay, what is the rate? Sir, first one, what is the transaction date? Original contract on 17th January, right? On 17th January, I entered into a contract that is maturing on 31st March. That is maturing on 31st March. For what? Forward. Enters into a forward agreement with the bank for purchasing $1 lakh. So I want to purchase $1 lakh from the bank. So it is a forward purchase. Okay, it is a forward purchase agreement. Yes. Okay, done. So it is a forward purchase contract. Now, sir, at what rate they will enter? On 17th January, they have entered into a contract for 31st March. So what is the rate? First of all, forward purchase. Now what is happening? I am buying dollars and selling dollars. Everyone, I want to buy dollar, correct? So I will buy at what rate? Bid rate or offer rate? I will buy at, everyone, offer rate, correct? So this should be the rate. Are you all with me? This should be the rate. Sir, now how to calculate, sir? 46.5450 is my spot rate, correct? Everyone, are you all with me? Sir, how to calculate this? What is my spot rate? 46.5450. This is my spot rate. Adile I have to add my swap points for offer rate. Okay, 4100. 4100. So plus 0.4100. So it is 46.955. Okay, so 46.955. Actually this rate is not required. Okay, actually this rate is not required, but for now let me write it. Okay, for now let me write it down. This rate is actually not required. For now let me write it down. 46.955. This is what is my original contract. Now I am going into bank when? 15th February. I am telling the bank I need money on 28th February. Correct? So I will enter into one more contract for forward purchase. For now what is the rate here? This rate. And purchase na, this is what, sorry, purchase na, this is what is my rate, correct? So 46.5025, 46.5075, correct? Here I think I did the same. 46.5450 plus 0.4100, 46.955. okay, same thing here, correct? I have to add this plus this. So 46.5075 plus 0.0700, 46.5775, 46.5775. Are you all with me? Sir, how I am calculating this price? 46.5025 plus 700. Okay, so 5275, 46.57. Here 507, really sorry, 5075. So 46.5775. Clarity, yeah? Till now are you all having clarity? Now sir, I want to also cancel that contract. So same 15th February, I am entering into one more contract that is maturing on 31st March for forward sell. Correct? For forward sell. Now forward sell, I have to sell US dollar at bid rate. Correct? So forward sell on 31st March. So 31st March, I will enter into a contract for forward sell. So what is my rate? 46.5025 plus 0.2225. So what is my rate? 46.725, correct? 46.725. This is what is my rate. Okay, this is what is my rate. Clarity, yeah? Till now, are you all having clarity? So these are my new contracts that I am entering on 15th of February. Okay, or let's say the bank is making that adjustments. Now net what the bank is telling. Okay, net what the 7245 illiye 46.5025 plus 0.2225 46.725 தானப்பா வருது. 46.5025 is my spot bid rate plus 0.2225. So 0527 46.725. என்னப்பா ஒரு addition தானப்பா, or take the calculator and calculate. So 31st March 46.725. Now sir, what is my profit or loss? For preponement and postponement, the difference between the swap, either the swap contracts, this is my profit or loss. Okay va? This is my profit or loss. So 46.725 I sold and I purchased on 46. Actually I am having a profit. Correct? 46.725 minus 46.5775. I am actually having a profit of 0.1475. I am actually having a profit of 0.1575. Correct? This is what is my profit. How much is my exposure? Dollar 1 lakh. So what is my profit in absolute rupees into 1 lakh? I am having a profit of 14,750. Upon this adjustment is leading me a profit of 14,750 rupees. Okay. If you see this rate itself, I am not considering. I will tell you why. Okay. For now, are you all understanding? This adjustment is giving me a profit of 14,750. This adjustment is giving me a profit of 14,750. Till now, are you all understanding? Hello, everyone. Okay. Sir, how this number you are getting? Okay, how this number you are getting? Now you see, sir, it is a forward purchase, correct? It is a forward purchase. So originally how much outflow I planned? How much outflow I planned? 1 lakh into 46.955. Correct? This is my original outflow that I planned. 1 lakh into 46.955. That comes to 46,95,500 as an outflow. This is the original outflow that I am planning. But now what is happening? I am entering into, so this outflow I am cancelling with another inflow. Correct? Another inflow. Idhukku against I have actually entered into one more contract, right? Forward sell. At what contract? 46.725. This is my outflow. Correct? So now 1 lakh into 46.725. What is my inflow? 46,72,500. This is my inflow. Are you all with me? This is my inflow. Sir, now what is my original outflow, sir? This was my original outflow. Either I cancel pannita. Now what is my actual outflow that I am going to have? 1 lakh into 46.5775. Correct? 1 lakh into 47.5775. That comes to 47 lakh 57,750, correct? This is my original outflow, correct? What is my net outflow? 46 lakh 72,500 minus 46 lakh 95,500 minus 47 lakh 57,750. How much I am having? Wait, 46 72 500 minus 46 95 500 minus why this is 47 per, really sorry, 1 lakh into 46.5775, it is 46 lakhs 57,750, sorry, okay. So 46 72 500 minus 46 95 500 minus 46 57 750. How much is your net outflow actually now? 46 lakh 80,750, correct? 46 lakh 80,750. Sir, previously your outflow was 46 95 500. Now your outflow is 46 80 750, correct? This was your previous outflow. This is your new outflow, correct? New net outflow. Appo, if there is a profit or loss, your outflow is getting reduced. So gain, correct? What is the gain that you are having? 46 lakh 8750 and 46 95 500. Your gain is 14,750 rupees. You see, this is the same amount that I am getting. Are you all with me? Because end of the day, this and this is end of the day, this and this is getting cancelled here. So in the net outflow, the direct profit or loss. So this amount itself is not required for calculation purpose. Everyone, how many of you are understanding this point, pa? Please respond. How many of you are understanding this point? If you are understanding, what you have to do, pa? Forgotten, pa? Everything forgotten. Super. Okay. So this is what is the question, sir. Which means if I'm asking the bank, hey bank, please prepone. So bank will do all this adjustment. So he will give me net 14,750 rupees. Okay, but net 14,750 rupees is the adjustment that is made, and bank will tell, okay, 28th of February, now I will, now you purchase it from me, 28th of February. So this adjustment is gaining me 14,750. Sometimes there will also be charges that I have to pay, okay, which means loss. So bank will tell, hey, you want to postpone, there are charges of 7,800 rupees, like that, something like that. Are you all with me? So this is how the questions will be. Okay, this is how the questions will be. Okay, this is how the questions will be. அதே மாதிரி ஒரு cancellation problem பார்க்கலாமா? Let's see a cancellation problem so that you will have some clarity. Okay, now let's have some cancellation problem. Cancellation problem ரொம்ப சிம்பிளா இருக்கும், ஸ்மாலா இருக்கும். Now you see, on September 15, the rupee per dollar rates were 41.1540 spot, or let me write it this way, where spot 41.15 or 40. Okay, 3 months swap points are 82 95. Okay va? A firm booked 3 months forward purchase contract for $1,50,000 on November 15. It wished to cancel the contract. It wished to cancel the contract. At that time, the rates were spot 41.90 and then 42.10. Okay va? It is 41.40. And 1 month swap 20/30. How much collectible or payable by customer? Okay va? Sir, cancel தானே சார் பண்றோம். Why there is a cash flow? Cancel பண்ணா you're entering into some adjustments, right? அதுக்கு there will be some either some charges or there will be some collectible or payable part. Now see the solution now. See the solution. It is pretty simple. In the format மட்டும் ஞாபகம் வச்சுக்கோப்பா. Things become simple. Transaction date, maturity date, type of transaction, and what is the rate. Sir, what is my transaction date, sir? 15th September. Okay va? 15th September. When you are maturing the contract va? Okay va? So 3 months. Okay. So October, November, December. 15th December. Sir, what you are doing? Forward purchase. Forward purchase. If you are purchasing, you will purchase at offer rate, correct? You will purchase at offer rate and this is the rate. Okay, this is the rate. So 41.40 plus 0.95 is equal to 42.35. Okay, 42.35 you are going to purchase. Now, when are you going to bank? You are going to bank on November 15th. So 15th November you are going to bank, which means cancellation before due date. Okay, cancellation before due date, and you are telling cancel. Okay, and you are telling cancel. How can I cancel this? 15th September, one more contract you will enter up to 15th December. Forward sell, correct? Forward sell. So sell at what price? Sell is at bid price. So I will sell at bank's bid price. Okay, and I will purchase at bank's offer price. So I will sell at what price? I will sell at this price, and that to 1 month swap, correct? Because I'm entering into a forward sell contract. Upper sir, 41.90 plus 0.2 is equal to 42.1. 42.10. Sir, now my sales is at 42.1. My purchase is at 42.35. So am I having a profit or loss? Sale minus purchase. Simple. Profit or loss? Sale minus purchase. Sir, 42.1 la sell பண்ற, 42.35 la purchase பண்ற. So which means I'm having a loss. I'm having a loss of 0.25 rupees. I'm having a loss of 0.25 rupees per dollar. Okay va? So what is my exposure? $1,50,000 rupees. Okay va? So amount payable by the customer. Okay va? Amount payable by the customer. How much is this? Into 1,50,000 rupees is equal to 37,500 he has to pay me. So they have to pay 37,500 as a loss. So அப்படினா நீ பாரு, you entered into a contract $1,50,000, nothing you did, just phone call. 15th November you're making one more phone call, cancel contract, loss of 37,500. Are you all with me? So cancelling the contract, it is 37,500 rupees is the loss. Are you all with me? So this is what is the question. Okay, this is what is the question. இதே மாதிரி due date cancellation. Due date cancellation na, instead of forward sell you will have spot sell. For example, if I'm coming itself on 15th December, let us say example, okay, example, if it is, okay, if it is on due date, now what will happen? This will be same for 42.35, correct? Forward purchase. Now here I will have spot sell. So 41.90. Okay, so what is my loss? 41.90 minus 42.35. My loss is 0.45. Into $150,000 is equal to 67,500. How many of you are understanding? But please respond, everyone. How many of you are understanding? Super. Now here I am making an assumption. That there is no exchange commission. Because if exchange commission is there, now my loss will increase. Here also he will charge a commission. Okay, va? So my loss will increase. Here I am not considering no time value of money, correct? Sir, early na time value of money, all these things I am ignoring. Time value of money itself I am ignoring in this chapter, okay, va? And no exchange commission. Because it is just 1 month, 30 days, 10 days, okay, other time value of money I am not considering. Had it been more than one period, 1 year, 2 year, and time value of money would have been considered. So there is no forward contract for next 5 years, okay, va? And forward contract is not there in the stock market. You can enter into a contract, but in stock market they won't enter that long contracts and all, okay, va? So no time value of money, and also I'm assuming that we don't have any exchange commission, okay, va? So with this, the concept plus the problems of disposal of forward contracts is completed. How many of you are with me, understanding and appreciating the concept about everyone? Okay, so please do this problem as homework, okay? This is a cancellation of contract, okay? So what is the loss or gain on cancellation? Okay, this problem I want you to do as an homework, okay? So if you see, the answer is this much, but yeah, you have to do it using the concepts that we have discussed. Are you all with me? Clarity, yeah, super. So with this, okay, today we have learned money market hedging, we have learned leading, lagging, we have learned exposure netting, we have learned, and then disposal of forward contracts, that is also we have learned today. Are you all with me? Disposal of forward contract is a very important topic. Multiple times questions has been asked, and also very easy to answer. It's only that you just have to think and you just have to answer logically. If you know the logic behind the problem, okay, things becomes very simple. Whatever be the case, okay, prepayment, postponement, on the due date, before the due date, okay, or cancellation before due date, on due date, everything can be handled very easily. Are you all with me? Hello. So with this, I hope you have enjoyed today's session. So we are concluding our today's session, and then we will continuing our next session with more discussions to be made. Okay, so thank you very much. See you all in the next session. Okay, so thank you very much. Notes I will share in the Telegram group.